As of this moment, Lithium Americas Corp., ticker LAC, is trading at $8.43 per share. That's a staggering surge of $0.94, marking a 12.55% gain on the day. Now, when a pre-production lithium stock jumps over 12% in a single session, the immediate, almost reflexive assumption for many retail investors is that the spot price of lithium carbonate must have had a fantastic day. Or perhaps another major automaker announced an ambitious new EV target. But that's not what's happening here. This explosive move isn't about the broad, abstract theme of electrification that everyone already knows. It's about the market aggressively repricing a very specific and severe risk that was just lifted from the company's shoulders, a development tied directly to a patch of earth in Nevada that could fundamentally alter the battery supply chain in North America. The general expectation, the story many tell themselves when they buy a stock like this on Robinhood or SoFi Invest, is that it's a simple leverage play on the electric vehicle boom. The logic is straightforward. More EVs need more batteries need more lithium, and a company sitting on one of the world's largest lithium deposits is bound to succeed. It's seen as a pick and shovel play for the great energy transition. You buy it, maybe in a Fidelity IRA or an individual brokerage account, and you wait for the inevitable demand curve to do the heavy lifting. But the reality, the truth that professional traders on platforms like Interactive Brokers understand, is that Lithium Americas isn't just a bet on lithium prices. It's a high-stakes, single-asset development story, and its fate is tied not to global commodity markets in the short term, but to court rulings, construction permits, capital financing, and operational execution. The 12.55% rally today is the market screaming that one of the biggest question marks, the persistent legal challenges to its flagship Thacker Pass project, is finally fading into the rearview mirror. The risk profile of this company just changed, and capital is flooding in to reflect that new reality. Let's break down this recent price action. A double-digit percentage gain doesn't happen in a vacuum. The trading volume accompanying this move is several times its daily average. This isn't just retail enthusiasm, this is significant capital being deployed. It suggests that larger funds, perhaps those managed by Fidelity Wealth Management or accessed through Schwab Intelligent Portfolios, which may have been hesitant to invest due to the legal overhang surrounding Thacker Pass, are now seeing a clearer path forward. The court's rejection of the final appeals from project opponents was the green light they were waiting for. It removes a major uncertainty that has suppressed the stock's valuation for years. For a developing miner, legal clarity is everything. It allows them to proceed with construction, and more importantly, it makes conversations with lenders and strategic partners infinitely easier. This isn't a speculative jump based on a headline, it's a fundamental de-risking event. While other lithium stocks like Albemarle are also up today, they are not seeing this kind of explosive company-specific repricing. That's the key distinction. LAC is outperforming its peers because its story just got significantly better on a standalone basis. This is a classic example for those interested in self-investing. It highlights how company-specific news can completely overshadow broader sector trends. An investor simply buying a lithium ETF would miss the alpha generated by this specific development. So what exactly is Lithium Americas, and why is this Thacker Pass project so important? The company is, for all intents and purposes, a pre-revenue mining developer. Its entire valuation is based on the future potential of its assets, not current cash flow. The company recently completed a strategic separation, splitting its Argentinian asset into a new company, leaving the current LAC as a pure-play North American entity focused solely on developing the Thacker Pass mine in Nevada. This was a brilliant move, as it allows investors to choose their geographic and political risk exposure. Thacker Pass is the crown jewel. It is the largest known lithium resource in the United States and one of the largest in the world. Its significance cannot be overstated. In a world increasingly focused on supply chain security and reducing dependence on China for critical minerals, a massive domestic source of lithium is a strategic national asset. The U.S. government is acutely aware of this, which is why the Department of Energy has been in discussions to provide a substantial loan to help fund the project's construction. This geopolitical angle is a core part of the bull thesis that you won't get from just looking at a stock chart on the Robinhood app. This project is about more than just EVs. It's about economic and national security. The business model is to extract lithium from the clay deposits at the site, process it into battery-grade lithium carbonate, and sell it to battery manufacturers and automakers. They already have a cornerstone partner in General Motors, which committed a massive $650 million, the largest ever by an automaker into a raw materials company. This partnership includes an exclusive offtake agreement for GM to purchase the lithium produced in the first phase of the project. This is a powerful vote of confidence and provides a critical backstop for the project's economics. However, looking at its past performance, the stock has been incredibly volatile. It has experienced huge run-ups during periods of high lithium prices and investor optimism, followed by brutal drawdowns when legal setbacks occurred or financing concerns came to the forefront. This is not a stable blue chip like Apple stock. It's a high-risk, high-reward venture that requires a strong stomach and a deep understanding of the underlying project milestones. Investors using online investment platforms must be aware that the journey from a promising deposit to a profitable mine is almost never a straight line. This brings us to the future outlook and the continued tension between expectation and reality. The expectation, fueled by today's rally, is that the path is now clear. The legal hurdles are gone, construction will ramp up, the DOE loan will come through, and in a few years, Lithium Americas will be a cash-flowing behemoth supplying the backbone of the American EV industry. The bull case sees the stock price many multiples higher than where it is today. They envision a seamless execution where Thacker Pass comes on time and on budget, perfectly timed to meet a tsunami of lithium demand. But the reality, the truth, is that the hardest part is just beginning. The primary risk has now shifted from the courtroom to the construction site. Execution risk is now front and center. Building a mine of this scale and complexity is a monumental undertaking. It is subject to potential cost overruns, skilled labor shortages, and unexpected geological or engineering challenges. Any significant delay or budget increase could force the company to raise more capital, potentially diluting existing shareholders. For anyone practicing self-investing, watching the company's quarterly reports for updates on capital expenditures versus their initial budget will be absolutely critical. Then there is the financing risk. While the GM investment is substantial, the total cost to build Thacker Pass is in the billions. The company needs to secure the rest of that funding. The pending loan from the Department of Energy is the most important catalyst on the horizon. Securing that low-cost government debt would be a massive validation and would significantly improve the project's financial structure. If that loan were to fall through or be smaller than anticipated, the company would have to turn to more expensive options, like issuing more stock or taking on high-yield debt, which would put pressure on the share price. Investors across all investment sites, from Fidelity to Interactive Brokers, are watching this development with bated breath. Finally, there is the commodity price risk itself. While the long-term demand picture for lithium looks incredibly strong, commodity prices are cyclical and can be volatile in the short term. A significant global recession could temporarily dampen EV sales and with it lithium demand. If the price of lithium were to fall significantly just as Thacker Pass is ramping up production, it would negatively impact the project's profitability and its ability to service its debt. The project's economic models are all based on certain price assumptions, and reality can sometimes be unkind. Comment below what you think the biggest risk for Lithium Americas is right now: execution, financing, or a drop in lithium prices. In closing, today's powerful 12.55% surge in Lithium Americas stock is a direct result of the market's relief as long-standing legal challenges to its Thacker Pass mine have been definitively put to rest. The common expectation is that this is just another lithium stock riding the EV wave. But the deeper reality is that this is a company-specific, milestone-driven story. The narrative has now shifted from legal risk to operational risk. The victory in the courts was a crucial step, but it was just one step on a long and difficult path. The future value of this company will now be determined not by lawyers, but by engineers, project managers, and financial strategists. The expectation of a smooth ride to production is just that, an expectation. The